Hello, and welcome to our market alert video for today, which is October 7, 2022. And I'm entitling this video, Could the Federal Reserve Kill the Stock Market? And the reason why I'm entitling that is because, in fact, one of the voting members of the Federal Reserve, Neil Kashkari, even was asked, the stock market is crashing. What do you think about that? And he said, we're happy about that. So the Federal Reserve is not going to be unhappy if the market crashes. He said, we're more interested in taking care of inflation than we are worried about what the stock market does. So what does that all mean? Well, you have to think of the U.S. economy like a big oil tanker. And you're trying to turn this oil tanker a mile down the water, across the ocean, a mile away. You're trying to turn it at a right angle into a causeway or into a docking station or something like that. And you got to fit it between, these two concrete pylons that it's going to fit in there. It's a very difficult thing to do because you got to plan way, way, way in advance. You got to start turning it. It's not like a motorboat that, you can turn it at the last second and get in there. No, you got to start thinking way ahead of time. How are we going to turn that? Well, the problem with that, of course, is that if you oversteer, then you'll hit the ship on this side. And if you understeer, then it'll be too wide and it'll hit the other side. In both cases, that's not a good outcome. And so that's the big concern, because what the Fed does historically, it takes 6 months before the economy starts to feel the effects of it. So when they raise interest rates, when they do whatever they're going to do, it takes a while for that to sink through the economy. And there is the risk that they could oversteer, understeer. And if they do, that could create all kinds of havoc with employment, with the economy, and therefore the stock market, the bond market, your investments, your retirement. So that's a concern. Now, don't underestimate the Federal Reserve, because one of the things that many people blame the Federal Reserve on is the Great Depression. During the Great Depression, they thought that by raising interest rates, that would help to stimulate the economy. And therefore, they raised interest rates in a declining economy. And guess what happened? It caused the Great Depression. So they're human beings. They can make mistakes. And those mistakes could cost the economy a lot, could cost you a lot. So we still believe that cash is king. As you know, we have counseled our clients and since last April to be out of all equities, all stocks. And we also, soon after that, told our clients to get out of all of our bonds. We've also sold all our bonds. And the reason why is because as the Fed raises interest rates, as you know, bonds tend to have an inverse relationship to interest rates. So as interest rates go up, bonds tend to go down. And in fact, we have the worst bond bear market since 1949 going on right now. And we don't know that it's over. So again, we think that cash is king. That's what we've told our clients. And it is not too late to visit with one of our retirement planners to look at what you should do, how you should plan for all of this, because we don't think it's over. And the data on the jobs today, that did not tell anybody that inflation is under control. The Saudis are not helping either by cutting production. Chances are that we're going to see gas prices head back up again. That's inflationary. The Fed has to fight that as well. So the Saudis, the jobs numbers, even Ian, the hurricane, what did that do? That's going to be inflationary. That's a lot of money that's going to be dumped in. People are going to need to buy all kinds of stuff. It doesn't look pretty. So I would encourage you to visit with one of our retirement planners. If you're over 50, if you're within 5 years of retirement, you want to retire, we want to help you retire when you want to. We want to help you to stay retired if that's you, and you want to get income from your investments. All of that stuff we want to help you with. So go to our website. It's rpoa.com and avail yourself of our resources. And we'll look forward to talking to you in our next video. So thanks for watching. Oh, and by the way, share this with as many people as you would like, okay? Don't be shy. As many people as you'd love. So thanks again for watching.